Being able to create a trading plan is vital in your success as a trader. This is episode number 7 in the series where I'm teaching my friend Josh.
Hello again.
How to become a consistently profitable trader in the stock market. Now, today we're gonna be hopping on inside my computer. I'm gonna be showing you exactly how to identify where to get in a trade, but more importantly, where to get out. So exactly knowing before you enter where you're gonna set your stop loss and your take profit, and then based off of whether you hit either of those levels, how much money you will make or lose. Now, if you guys are also interested in learning how to become consistently profitable in the stock market, I do have a mentorship group, and we'll put the first link in the description below. So if you wanna head over to my website, check that out. You can see everything that is included. With that said, are you ready to learn how to create a trade plan?
I'm ready.
Let's go. We're gonna go through the entire process of actually identifying a setup, okay? One of the 4 setups that I trade that you've learned.
Okay.
We're gonna identify that setup, and then you're gonna go about setting your stop loss and your take profit, right? Okay, so essentially looking at the chart, analyzing based off of everything you've learned, where are you going to be wrong or where are you gonna be right? And I keep saying that, realize how important this is. We'll set that stop loss, we'll set that take profit on the chart based off the technicals, right? Everything from a technical perspective that you know and have learned up to this point. And then we'll actually go about simulating that trade out using the Analyze tab on our platform. And then I'll give an alternative option that you guys can use if you're not on Thinkorswim. It's an option profit calculator that you'll be able to use to do the same thing as Josh is gonna do. Sound good?
It sounds like a plan.
So I'm gonna let you take over. So I want you to go to trade. Let's go to, you can just open up the, watch list, whatever watch list you'd like. Let's go about finding a setup. We're just gonna start looking through, visually scanning through a series of stocks and trying to identify one of the 4 setups that I trade. 2 of them you guys learned in one of the previous lessons. And then the other 2 are obviously in the masterclass, which you've taken and you already know about, so. Hershey's. You like that one?
On it.
Add it to our watch list. Yep.
HS1. Exactly.
All right, that's 1. Good. Let's find. And what setup is this, Josh?
This is the it's the 4th one. It's the push.
Oh, what's it called? Pullback play.
Pullback play, yeah, right?
Yeah, over time, don't worry, you'll remember all the setup names, but you were able to identify.
I remember what it looked like.
Yeah, that's good.
Pullback play. All right.
All right.
That looks good.
That does look good. So you've got your 2 stocks, SJM and HSY. Both of these present the pullback play setup.
Correct.
Okay. So now what we want to do is if you're on Thinkorswim, head over to the Analyze tab. Now, this is so important. Like without this, you're going to be totally lost. Like you need to understand how to do this. You need to know exactly how much you're going to make and lose on those contracts based off of where you're going to have your stop loss and take profit set.
Okay.
Make sense?
Don't want to be blind going into your contracts.
You don't want to enter a trade having no idea how much you're going to make or lose, which is what most people do. Okay. Obviously we're on my account right now because you can see the net liquidity is 491,000. So it doesn't matter. We'll pop on your account later, but this is where a lot of the trading comes into play, like the actual trading, the technical analysis part. Where are you going to set your take profit? Now with this setup, it's a little more straightforward because obviously the intention here is to play the move back down to that low, okay, down to the low. So 107.33 in this case is going to be your TP or your take profit. This is where repetition, practice, and repeating the process of not only identifying the setup, but then identifying where you're going to go about, in this case, setting your stop loss. This is where that comes into play. So let's look at resistance overhead. Let's look at the moving averages first and then say whether they're respected or not. And then let's look at the key levels, all right, or our levels when it comes to the actual candles. So looking at price movement. So our moving averages respected, will any of them come into play within this trade?
The 50-day looks like it's respected. It's probed a little bit, right? Is that too far broken?
It looks like it's traded above it for multiple days.
Yeah, so no, not respected.
I wouldn't say it's respected. I would say that if we set a trade plan and stop out at the 50-day, there's a very good chance we're just going to run up to this next high and then pull back.
So you think right around
The easiest thing to do is go back in the past and slowly chart out your resistance levels. So by charting out the pushes, so when it pushes into a new high, let's do that. So you might not need to start as far back as this, but maybe down here a bit because, right, that's just going to be so far outside of like where your actual target would be, or in this case, your SL would be.
It's right there, 115.
So yeah, there's definitely some resistance here. So 115.75 roughly, right? We can be a little more accurate. You can see that candle did end up actually pushing a bit higher. So just be careful when it comes to actually setting these levels, wherever that highest high is. So yeah, you can see we formed resistance at 115.92. Second 4-hour candle, we tried to push, okay? We were not able to break above 115.92. Yes, like we didn't hit the exact area and get rejected. Price was just not strong enough. Buyers were not strong enough to end up pushing into that area and breaking above. Okay, started trading to the downside, a little bit of a range here, trading flat, started pushing back up. Another attempt, buyers failed to break above 115.92, pulled back. All right, now we've continued. Looks like, same kind of story here. We're continuing trading lower. And then we traded all the way down into that low at 107.33, which would be our target. Okay.
For the take profit.
Yep, for the take profit. And then again,
back up here.
Cleaner and clearer the chart. Again, it's going to be easier to identify our levels. Again, in this case, we're trying to identify right now our stop loss. So it looks like we've definitely got some resistance at 113.96. So it looks like two tests of this area, pulled back, pushed, one test, wasn't able to break back above. Let me ask, which area would you like to use? There's also definitely a little resistance here, just to be aware of. So we've got kind of 3 areas of resistance. 50-day, I wouldn't look at. 15-day, I wouldn't look at. 180 days trading too far above.
Okay.
Which area of resistance are you going to go about using? What looks like the strongest level? Because let's be honest, we want to find the strongest area of resistance, hoping, right? I don't like really using the word hoping, but the intention would be that price would end up getting rejected off that level and pulling back, so we wouldn't get stopped out. And so if this seems like a weak area, or for example, if there's a stronger area above,
use that.
Yeah. And then when you go to actually simulate the trade, well, that's going to tell you whether you can actually put on the trade or not based off the risk reward.
Well, the 113.96 has been twice, right? Exactly twice. It's been hit.
Yep.
These, I don't think that's.
And I wouldn't even count out and say this one's two tests of this one. This one's got 3 tests of this resistance. Let's go with the 3 instead of the 2. Let's just look at the bigger picture here and be like, all right, realistically, if we break above here, where are we going to rally to? Do we want to use this area? That's going to give us a little more room. But looking at our, take profit, we're very close to that take profit.
Yeah, so just the percentage is going to be way higher if we go and do our stop loss up here.
Looks like, yeah, either way, looking at the chart, you can chart out right now from where we're currently trading down to our take profit and get that percentage on the chart. And just knowing kind of that rule of 3 to 5% is what we're looking for. If it's, more than or less than, it might not be even worth taking the trade. So
like
we've got about
4.5%
to the upside to that next level of resistance, whereas only about 1% to the downside, like our target.
So not very worth it, looks like.
Well, we don't know.
Okay.
We can, knowing what at this point, you've already kind of been able to gauge whether this trade is going to be worth taking or not. But I still, for the purpose of this video and, you learning how to actually simulate out the position, we'll still set this trade plan. So for the example, let's say 113.96 is going to be your stop loss. 107.33 is going to be your take profit, right?
Okay.
Let's head over to the Analyze tab. And let's enter your take profit, which is going to be 107.33.
Here.
Okay, STK price, that is where you're going to enter your stop loss and take profit. So 107.33. Okay, 113.96. And then, we can just zero this out if you want.
What's that?
That's just another area where you could put another level.
Okay.
So are you looking at this screen here? Is this confusing you?
Yeah,
You have no idea what's happening?
I don't know what's going on.
Okay. The only thing we're going to be using are going to be the add simulated trades and the risk profile. Okay. So risk profile, that's where we're going to obviously entering in our stop loss and take profit. And then when it comes to the date up here, this is the only other thing we're going to want to use is the date up here. That's going to be the expiration date of the contracts that we're going to choose. And then the date down here is going to be the date at which we're going to be doing the math behind to figure out what we're going to be up, what we're going to be down, based off of whether we hit that SL or TP on that day. Make sense?
Yep.
Okay, so let's go back to trade. So we've got our trade plan set up. Let's go back to analyze and we can go over to add simulated trades. Now this is what a lot of my time is spent doing, what I like to call manipulating contracts, which we're going to be essentially trying to find which contracts are going to present the best risk to reward. Okay, let's go ahead. Let's just go with, for example, and if you want to drop that
This
other one, yeah, options chain. So obviously under the options chain, let's close that. Now here's the problem. I'm going to say this right away. Looking at these contracts, I'm more than likely assuming that this is not going to be an option or a stock that we're even going to want to trade options on. So if we go to trade, go back to the live market, and we go to add or all products, we've got the December 15th, 2 sets of those. All right, so the issue here is that we've only got monthlies and not many monthlies. So we don't even have weekly expiration dates. We've only got Decembers, we've got Januaries, we've got Aprils, we've got Julys, Jan 25s, and Jan 26s.
Wow.
So more than likely, there's not going to be much volume on these contracts. So let's open up, say, the December 15th contracts. So we could see, looking under volume, we've got a lot of NAs, little volume there. If I see any NAs like that, that's going to be a pretty big, just not a red flag, but more of just a thing to take into consideration, knowing what we talked about in the previous video.
They're super expensive to hold too.
Data is not necessarily super expensive, $10. You kind of have to reference the price of the contract. Okay, maybe if they're only $250 a contract and they're $10 a day, you can kind of see it's going to cost whatever that would be, like a couple percent a day out of that, obviously the contract price. But in general, what do we talk about when there's less volume? What does that mean?
You won't be filled, right?
Less volume, less people trading the contracts, right?
Yeah, so
bigger spreads.
And
then at the end of the day, like, you might not be able to get in, or you'll get in the trade, but you'll get a bad fill and you'll end up paying a lot just to get in, and then you won't be able to get out, or you'll have to, take a big loss just to end up getting filled to get out of the position. There's going to be just that large spread in general. We're going to kind of want to stay away from most stocks that do have NAs, and especially stocks that only have monthlies. Just be aware, or only a couple expiration dates a year. Just be aware, we want to more than likely stray away from those. So you'll kind of get a feel for that as you go about trading over the next couple months. But the purpose of this video, let's go back to the Analyze tab and let's just run through what this trade would actually look like. So Analyze, let's go with the December 15th contracts. And obviously, what is the intention here? We're trying to bet on the stock going down, right?
Down.
So we want to buy what?
A put.
A put, good. So let's go with something a little, more conservative, like, I don't know, the 120s in the money a bit. So again, blue's in the money, and then the dark is out of the money. Okay, so you clicked on buy, obviously, under ask, and now we want to just do the math behind one contract. Okay, just to make it a little more straightforward. Obviously, the percentage gain or loss behind this will end up being the same. Per the whole, position, however many contracts. So you can see we're buying one contract of the SJM December 15th, 120 puts. And then right here, 1260 is the current price that the Analyze tab has said these contracts are currently trading at. One thing I always do is go and reference the live market. So if we go to trade and we go to the December 15th contracts under the options chain, and we were looking at what, the 120s?
Yeah.
So you click on buy. And we can see down here, you've got obviously the spread, 1160 and 1180. Say we got filled at 1160. Okay, just to generally know, it's flipping between 1170, 1160. So let's say 1160, if we go back to analyze, okay, it's at 1180. So let's change that to 1160. Let's say theoretically, if we got filled at 1160, and then let's go back to risk profile. And this risk profile tool is something that I want you to practice using a lot. If you don't have Thinkorswim, I will link in the description below another tool you can use. If you want to open this right now, it's the optionprofitcalculator.com. So this is the tool that, I would recommend using if you don't have Thinkorswim, if you're on another platform that doesn't offer any way to simulate out the contracts and their P&L open. So essentially what we're going to be using in this case is going to be under basic, long call, long put. So naked call, naked put. So long call, if you want to click on that, or long put, doesn't matter. And then we're going to go ahead and enter the symbol. So SJM, right? SJM. and then it should be able to pull up the current price the stock is trading at, and then you'll be able to essentially just run through everything we're about to do. So 108.62, we're buying, and then you can select the option. So you're gonna go about buying the December 15th. You're under December 15th right now, 120 puts. So there you go. It looks about the same. And then the price was at what, 160?
160, yeah.
Or 1160, sorry. The price was at 1160, so we'll go ahead and adjust that to the live market. Total cost is gonna be 1,160. Great, and then we're gonna go ahead, all right, hit calculate. Awesome. So now you can see here, essentially we've got all of the variables. So depending on when you go about closing that position, so obviously on the left, we've got the strike prices. On the right, or on the top here, we've got the dates. Okay, so essentially how we're gonna use this real quick, very briefly, SJM, obviously the ticker, the prices the ticker is trading at. So let's say SJM is trading at 114 on, December 6th. Well, that means our contracts, if you scroll down, are going to be down, okay, 45% or $530. Now, let's say SJM is trading at 108 on December 11th. SJM is trading at 108. Now our contracts are going to be up 3.1% or $36. So you can just see, right?
Okay.
And these are all the percentages. So you can see essentially and do the calculations as to how much you're going to make or lose. So click on that. Essentially what this tells you is that on, let's say December 9th, okay, if we did close this position, well, SJM was trading at 107.50, okay, the price per contract would be $12.45, okay, which means we'll be making a total of $82 per contract. So you can essentially see exactly how much you will make or lose. I'm not going to go into the depth of using this tool, but we can obviously look at the percentage entry cost and the profit loss. So the dollar profit loss is going to be a little more helpful than the percentage because you can kind of work backwards. So if we're looking at the dollar profit loss, that's what we're going to be looking at on Thinkorswim. So let's say our trade plan is going to be, if we hop back on Thinkorswim, let's say our average hold period is between 3 to 5 days. We're going to want to change this date to 5 trading days from now, December 7th. Okay, it's 5 trading days from now. That's essentially the longest we're gonna hold this trade. Just know that every day risk to reward is gonna be changing. So the risk to reward every day is gonna change a little bit depending on the contracts. But by going out as far as essentially you will end up ever holding that position based off historical data, even though we don't have that yet, but I'm just telling you based off of the way we're gonna go about trading, you're gonna end up being in positions for no more than a week. So 5 trading days, okay? So essentially what this tool does down here, when we choose the date, that means the math is going to be reflected under P&L open based off of whether we hit your take profit or your stop loss on that day on December 7th. So now we can see if on December 7th, we hit our take profit, okay, right, at 107.33. If we go back to active trader, 107.33, we will be up $107. Okay, that's our P&L open on this one contract, which is currently, well, let's say theoretically, we got filled at 1160. And then 113.96 being our stop loss, okay, right here, 113.96. Well, if we hit our stop loss on December 7th, we will be down $556. Not great. Okay, we'll get into all of that and, actually being able to determine, well, what are we looking for as far as the P&L open? So what is the percentage of loss going to look like behind this? Whether we're making, because obviously the contracts are trading for $1,160. So you can kind of see, well, if we're going to be suffering a $556 loss, that's going to be 40+% of the entire position, which is a lot. Mm-hmm. So that's all going to come into the equation that we're going to use in essentially my risk management algorithm that we're going to dive into. But today, I just want to cover how to go about using the Analyze tab to actually figure out what you're going to make or lose, because then all we're going to need to take is this P&L open, and then we'll pop that into the calculator that I have. This calculator I created, which uses my essentially risk management algorithm, and that'll give you the variables on whether you can take the trade or not based off of historical data, which we will collect. So there's a lot going on here. Yeah, once you start trading. So let's go to trade. Let's go to the next stock, which is going to be HSY. And I want you to identify, again, your take profit, stop loss. And then I want you to run through the Analyze tab, setting those levels, and then getting your upside and getting your downside.
Okay. Okay, take profit at the low, 183.74.
Perfect.
And then I'd say the strongest would be up here. What was that? 199.92.
Yeah, see, this chart is a little
It's choppy.
choppy. So that's why it might just be a trade that you're never going to be able to take because the levels aren't very clear. I definitely think there is a little resistance at 192.94.
Not much though.
There's not much resistance. Definitely an area of resistance at 199.92 and then 200, but nothing that I would be too confident in actually taking a trade knowing that, you know, if I hit that area, I'm out. I'm wrong. I'm losing money. But I guess for the purpose of this video, we're just trying to learn how to use the Analyze tab. But if you want to kind of zoom out here and look at the bigger picture, have you identified, obviously, the pullback play, and then it looks like that 50-day was just recently broken and no longer respected. It looks like trend has kind of shifted. So because of that, I wouldn't even say necessarily that this is a pullback play because knowing what we learned, right, so far, we obviously were following, you know, this very clear, strong trend, clean pattern of lower highs, lower lows, rejections at the 50-day, and then it looks like just recently we did end up breaking this pattern, okay? Obviously formed that low, but now it looks like the 50-day has not been respected over the last couple weeks. Traded up into the 180-day. You know, it seems like price has been very choppy compared to what it looked like before. And I wouldn't say there's any clear levels of resistance overhead where I'd be too confident in setting my stop loss. We're trading pretty close to that low. But again, for the purpose of this video, the idea is to find that stop loss, take profit, run it through the Analyze tab. So let's just say theoretically, even though this is not a trade that I would take because I don't think that the, you know, pullback play setup is presented anymore. I think it would have been previous to, you know, this breakout above the 50-day and then a move up into the 180-day. I would say, you know, back here, if I was to short, I would have shorted down to that low. Obviously saying that in the, you know,
in the future.
Present, looking back in the past is different. But at this point, knowing that this pattern really has been interrupted and now we're trading in this, you know, chop and, you know, the levels aren't clear, then I wouldn't be taking any trade on this chart. But let's use that. Let's say theoretically, we're going to play a move back down to 183.74. And let's say theoretically, we'll get stopped out at 205, which would be an awful trade.
Yep.
But let's use those levels, and I want you to run through the Analyze tab on your own. You want to show everyone what you just did?
Okay, so I did the take profit at the all-time low at the 183.74, and then I did the stop loss up here at 200.5.
Now the next thing is going to be to go to add simulated trades, okay? And let's just choose a random contract. This does look like a stock we'd be better off trading options with compared to SJM because we have weekly contracts. You can see those yellow contracts, and there's more than likely more volume on these. But that's something we would want to go back to the live market and reference and check the volume behind the contracts before we enter any trade. But for the purpose of this, obviously, let's just go with whatever contracts you'd like to simulate. We can go with something which would be inherently super risky, like very far out of the money puts, expiring December 15th, which is just in a couple weeks. So, you know,
Let's do like a 150 put.
Well, there's no one. Like, see how the bid's 0? So, like, maybe choose, like, the 180s.
180. And then ask. Okay.
Okay. Now, what's next?
So one
contract. Good.
where do I set the, where's the limit? Where do I set the price? Did I do something wrong? Right here.
So you can go reference the live market again to see what those are trading at. If you want to go to the December 15th, it was 180. Yeah. Perfect. 88. So that's a large spread. 88 and 95. That's a
pretty
large
big
spread. We haven't looked at the volume, but let's just go with 88. And then there you go. Okay, so we've got our P&L open.
Nice.
$2.
Just enough.
So our upside is only $2 on these contracts, and our downside is 87. 87 is essentially 100% of the contract's value. Obviously, we still have the date being December 7th, at which we would get out of this position 5 days from now, knowing that our average hold period would be between 3 to 5 days. We'll have more accurate data for yourself. And once you start putting on simulated trades and paper trading, actually putting on these trades, just in general, just knowing that, okay, we're only, potentially going to make $2 to then risk 100% of that position.
I don't know, man.
Doesn't sound like a good trade to me.
Could be worth it. We don't know.
So does that make sense? Obviously, you could go to risk profile.
And so what's this? Like, what's going on here?
You want to change the date to the expiration date up here.
December 15th.
That might change it a bit, but it looks like it's just going to be the same. Okay. So this, just ignore this. You don't need to use that. I'm not going to confuse you. This is just like a visual way of looking at it.
Okay. So
I don't look at this at all. No.
Okay.
The idea here is all we need to be able to do is get the P&L open for our take profit and P&L open for our stop loss based off of the levels back to trade, based off of the levels back to active trader that we have set on our chart.
Okay.
Okay. So the TA, the practicing, really identifying these setups, trying to identify one of the 4 setups that I teach, looking to see whether moving averages are respected or not, using either moving averages as areas at which we're going to set our SL or TP or the candlesticks, actually setting those and then getting that, back to analyze tab.
Analyze.
P&L open, getting those numbers. We're going to take those numbers and that's going to help us later on into actually managing risk. But we're going to set a baseline for your risk management when we start out, actually, like I said, paper trading to collect data, because like data is king and we can't do anything without data, without having like kind of a benchmark.
Okay.
But that is going to cover everything that I wanted to go over today with you.
All right.
Do you have any questions?
I don't believe so.
Nothing?
No questions or anything.
So what your homework is going to be is, since you have access to the masterclass, I want you to go through under system execution, and I want you to watch the using TOS risk profile tool, essentially what we went over today, and creating a trade plan. I want you to watch those two, and just to, again, kind of practice, rinse and repeat, understand, how this works. This will all just become very second nature to you. So, watch these 2 videos within the masterclass. They'll essentially cover what we covered today, but in a little more depth and detail. Some little things that, if I had added in here, they would have compiled, and this video would have taken 3 or 4 hours to film.
Okay.
Awesome.
Sounds like a plan.
Great. All right. I hope you guys did enjoy this video. Again, if you are interested in joining my mentorship group, learning how to become a consistently profitable trader with my help, well, the first link will be in the description below. You can click that, see everything that is included, and go ahead and apply if you would like to. And I hopefully look forward to working with you if you are accepted. Josh and I will see you in next week's episode.
Peace, guys.
Later.